Look, these guys are saying it, not me. I'm just reacting to it. So I wasn't going to make a video until later this week, but this thing came out today, and we're going to talk about it. Now, the headline makes it seem like some very scary news. Hedge funds are selling Gevo, and that may cause some institutional investors that rely on algorithms to trade stocks to maybe sell Gevo. Now, I don't know if this news was the cause of the 4% downturn, but I mean, it did drop 4% today, and this news did come out. This is an article by Insider Monkey trying to convince us that hedge funds are selling Gevo. So now I'm not going to read this whole thing. You can pause and read this if you want to, and I'll put a link in the description. But Insider Monkey tries to convince us that Gevo is a bad play by saying that Gevo is, as of the end of the first quarter, is in 6 hedge funds portfolios as opposed to the all-time high of 7. So 1 hedge fund pulled out. Ooh, scary. Call the police. And I guess so this article is trying to get you to be bearish on Gevo, and they're not talking about the fundamentals of the business. They're not going over, 10Ks and 10Qs. They're not going over their financials, which, if you've been following Gevo for some time, it's going over their financials is pretty easy pickings when you want to be bearish about Gevo. Let's be honest here. They're not going through any of those routes. They're going through freaking hedge funds. And they go on to talk about their calculations showing that Gevo is among the 30 most popular stocks among hedge funds. Well, yeah, no shit. I mean, Gevo probably won't be that for the next couple of years. Like, Gevo is not, people aren't buying Gevo because it's hot right now. People are buying Gevo about the contracts locked in place. Now, you can follow, I'm not going to go in-depth on Gevo. I have a whole playlist in which I talk about the stock at length, which you can watch up here. But, people aren't buying Gevo for now. They're buying Gevo for the future. They don't really, retail investors aren't really in it for the hedge fund opinions. And Insider Monkey goes on to say, and you can read this if you want to, that they argue the case that following the top picks of the best hedge fund managers can outperform the broader indices by a solid amount. So their advice is to copy hedge fund stock picks, and that's how you beat the market. Yeah, hedge funds beating the market. Yeah, I don't think so. And here's another report saying the same thing. Insider Monkey may try to tell me that following hedge funds is a good move to make, but I don't know. I may not be an expert, but Vanguard is probably an expert. The S&P SPIVA report, that was probably done by experts. And they try to hammer the point that hedge fund sentiment as a useful indicator that investors should pay attention to. And then they want to, submit their authority by, let's see the details here. And they want you to buy their monthly activist newsletter for only $450 a year. Wow, imagine that, to see the proof. Okay, yeah, I think I'll pass. Now, I'm not going to suggest that I'm an expert at stock picking, and Insider Monkey is not. And I don't know what sort of time period Insider Monkey is using as far as their, their predictions, because I'm not paying for their monthly newsletter. But on this channel, we believe in buy and hold for the next 3 to 5 years, if not longer. And in my channel, and in actual good YouTube channels like financial education and stuff like that, the whole strategy of hitting home runs is not to copy the hedge funds. No, the whole point in hitting these home runs over the long term is to beat the hedge funds. No, we know that the hedge funds are the big money. And, once the hedge funds get involved, that's when the money comes in and the stock shoots up. But in order to take advantage of that, you need to already have the shares. You need to be in first. That's the strategy, as far as my opinion is concerned. Now, I don't do short-term or medium-term stock investing. Well, I guess that's stock trading at that point. Maybe for short or medium term, Insider Monkey's strategy might work, but for long-term buying and holding, no. Don't copy the hedge funds. Beat the hedge fund to the punch. All right, now let's scroll on down past the point where they continue to shill their monthly newsletter to the point where they talk again about the total of 6 hedge funds tracked by Insider Monkey hold Gevo, down from 14% from 1 quarter earlier, which is still one fund, only one fund. 14%, yeah, that sounds scary, just like that, but it's only one hedge fund. And A year ago, according to this very same article, there was only one hedge fund that was bullish in Gevo. That's still really good. That's still really good. And then here, so up here, they talk about the funds that do hold Gevo. And then here, they talk about the funds that, well, there is one fund that completely dropped Gevo, which is Paloma Partners. And then there was Exodus Point Capital, which lowered their position in Gevo, which I think they still have it. I still think they still hold it, but, I mean, if you know, let me know. But I'm pretty sure they just lowered it. They still hold Gevo. And then down here, they tried to continue to hammer their point home that Gevo bad by comparing Gevo with stocks similar to Gevo, such as the Buckle. How is the Buckle similar to Gevo? Now, I understand that they give the explanation by saying that they share the same market cap, but that doesn't mean shit. I mean, how does Hostess, the brand that has Twinkie, how is Twinkie similar to Gevo other than market cap? I think, in Sumo Logic, I think that's a cloud company. Like, these are all different fields. Like, these are all completely different industries with completely different trends. Like, I'm pretty sure these businesses were affected differently by COVID. Like, Gevo only had 2 factories, and they were both shut down due to COVID. Like, you could still buy Twinkie in convenience stores during COVID. You can't buy Gevo in convenience stores during COVID. It doesn't work that way. I'm pretty sure the data is accurate, but it's meaningless. And the last part I want to talk about is down here, where they talk about Gevo not being as popular as these 5 stocks. There's a link down here, which leads you to a whole other show page where they continue to show their monthly newsletter. And they give you a whole slideshow. I hate it when they lead the slideshows. They don't just give you the list of 30 stocks. They direct you to a slideshow which is full of ads. It's And they talk about the stock returning 6.9% since the end of the first quarter. I beg to differ. This was the first quarter results, and since then the stock was up 64.08%. I don't know where they're getting this 16.9%. But if you've been investing in the Gevo and you bought the dip like you should, you are not down 16.9%. Now, if you've been investing in Gevo during the past decade, that's a different story. But if you invested, smartly, then you're probably sitting fairly pretty right now. Yeah, so I don't think the article is worth a dime to long-term buy and hold retail investors. But I will say this: if that article was the cause of Gevo dropping 4% today, I have a request for Insider Monkey. I need you to run that report or run 2 more news articles like that so the stock can drop to $6 so I can finally load my tiny ass boat on that stock. But anyways, take care, have a good day, and eat your vegetables.